Hey guys, what's going on? Coming to you with another video. So today I want to talk to you about a company that I own. I'm a big shareholder in. Company's Dropbox, ticker's DBX. Today I want to talk about their earnings. So they just recently, last week, posted their earnings, or the week prior, I forget. It was recently. The last 2 weeks they posted their earnings for the last quarter. So I feel like this video is long overdue. I should have made this a couple days ago, but there was just so many crazy things going on with the market and everything else. I kind of got lost. So I wanted to, share my perspective on the earnings of Dropbox. So this is, I call it the Big Four 2021. So if you haven't watched my previous videos, this is one of the 4 stocks I'm targeting this year and building out a position because I feel like there's a lot of, positive long-term growth for this company. So before I get into it anymore, make sure you like, subscribe, comment below. I'm trying to get to 200 subscribers by Monday. So this video is going to be out Sunday at 9 a.m. So I got to get like 30 subscribers probably, which is probably a stretch, or 25. But we'll see what happens. So if you just hit the subscribe button, much appreciated. So like I said, this is one of my big 4. Very focused on it. I'm a long-term investor. That's really what I preach and what I believe in. I love growth stocks. That's kind of what I enjoy playing the most because I feel like the risk reward is awesome in my opinion. So the earnings dropped. Some key things that you have to look at when you look at the earnings. They were up 13% year over year in revenue. That's anything double digits is really, really, really good. So they killed it last year. I think they're gonna do the same next year, if not do even better. So that's super exciting. They have super strong margin. They have a lot of cash flow. So that's also something when you buy a company, you really wanna make sure they're obviously growing. They have strong margins so they can continue to grow, reinvest in their business and expand. They got cash flow, obviously, so that's good. They also recently just laid off a bunch of people, which is good because I think they're cutting the fat out of the company to bolster the margins and just be more of an efficient company. They are moving to a remote first company. So I feel like a lot of big tech companies and, with what happened last year, it opened people's eyes, maybe get rid of the buildings, save costs, add margin, reinvest, and then people can work from home. So I kind of see the direction. I mean, I see the pros and cons in it, but for this kind of company, I see more pros than cons. So I like that they're doing this approach. I feel like it's going to work for their business model. They have over 1 million paying users currently, and I view this company still as like a really, 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 beginning company basically. So they have 1 million paying users. So they have a lot more users obviously than that, but the paying users is really what you want to focus on. I guarantee you by next year, they'll have 1.5, 1.25. So they're going to constantly grow. So that's a lot of users. A lot of colleges use it, schools use it, small business use it, medium-sized business use it, some big businesses. But this whole business is going to be the future, just with storage and stuff like that. Another good thing when you invest in a company, especially when it's volatile like the market, which is going to be, I feel like in the next couple months, maybe even a year, they have $1.1 billion of cash laying around. So no matter what gets thrown at them, they have enough money on the balance sheet to really make it through anything. So I mean, that's good when you invest in a company like this. You want to make sure they have a strong, pile of cash laying around. That's cash and cash equivalents, not just cash. But it's it's the same thing. So yeah, they're killing it year over year. So this is a company that basically is doing great. It's gonna do great for years to come. I think the next decade, this company's gonna have massive growth. Not even like 3 to 5 year vision. I feel like the next 10 years, it's gonna have massive, massive, massive growth. And people could argue, oh well, it's in a very competitive space, but I feel like there's enough room for, 4 or 5 major players because of how big this space is. The total addressable market is massive, basically. So I wouldn't, get caught up on researching, competitors and stuff like that. There's enough room for everyone. I do think sometime next year in 2022, this stock will reach $50+. I just have a weird, just on the numbers I'm running based on the earnings and where I think this company is going and based on what the market's going to do, I really think this company will be $50+ in the next, sometime within 2022. Currently, the current price of this company is $22.54. This is a really, really, really good price, especially if you're not in this stock. It's very appealing to jump in at this. This is actually below, no, it's not below my cost base, but it's very close to my cost base. My cost base is, I think, $20 and some change. So mine's the $20 range. I started building my position at like 16 or 17. I average cost it up like, whatever, a while ago. But this is, a good starting price if you're not in the stock. If it goes down, just average cost down. So would I buy right now? Yes. Am I going to buy? My position is pretty well built out right now. So I'm going to wait and see what the market does in the next, I want to see what the market does in general. But as of right now, I'm not going to pull the trigger on, this cost. But if you want to start a position, yeah, I would definitely get into it. So yeah, so with that said, I want to get to 200 subscribers hopefully by Monday or get as close as possible. So make sure you like, subscribe. This is a really good stock. So if you're looking to get into like a tech slash, cloud-based storage company, this stock's great. So if you want to branch out of your portfolio or you don't have something like this, I highly recommend getting into something like this. So that's all I got. Like I said, like, subscribe, peace.